Ever wondered what makes some investors legendary while others fall by the wayside? What if I told you that the secrets to their success aren't hidden in complex formulas or exclusive networks, but in timeless principles that anyone can master? Let's dive into the world of legendary investors, where we unravel the remarkable lessons from icons like Warren Buffett and uncover strategies that could transform your financial future. Number 1. Invest in what you know. Warren Buffett's advice centers on the power of investing in familiar territory. Dubbed the circle of competence, this strategy ensures that investors put their money into sectors and companies they truly understand, leveraging their own expertise and insights. Imagine taking a deep dive into the industries you're passionate about, turning your curiosity into a powerful investment tool. By mastering the sectors you know best, you not only gain a strategic edge, but also cultivate a deep connection with your investments, making each decision a reflection of your unique expertise. Take Singapore as an example. An investor well-versed in the banking sector might look at OCBC Bank, one of the leading local banks. With its solid reputation in Singapore and promising growth opportunities in mainland China and Hong Kong, OCBC presents a compelling case. Armed with knowledge about the bank's operations and the market environment, investors can approach their decisions with greater confidence and clarity. Number 2. Look for moats. Warren Buffett frequently emphasizes the importance of investing in companies with formidable moats, those distinct competitive edges that shield them from rivals. These moats could manifest as powerful brand recognition, superior cost efficiency, network effects that amplify value, or advantageous regulatory positions. Consider Singapore Airlines as a prime example. This esteemed airline shines with its robust brand identity, dedicated customer base, and unwavering commitment to operational excellence. Despite the severe impact of the pandemic, its long-term prospects remain promising within the expanding aviation industry. What's truly remarkable about Singapore Airlines is how it transformed adversity into opportunity. Despite the pandemic's devastating effects, this iconic carrier didn't just weather the storm, it soared to new heights. By doubling down on innovation and redefining its customer experience, Singapore Airlines not only survived but strengthened its position in the competitive aviation landscape. This resilient approach serves as a testament to the power of strategic foresight and relentless pursuit of excellence. Number 3. Focus on long-term investments. Warren Buffett, the Oracle of Omaha, champions the philosophy of long-term investing with his famous mantra, "Our favorite holding period is forever." This approach urges investors to shift their focus from fleeting market fluctuations to the enduring value of their investments. Imagine harnessing the investment strategies of legends like Warren Buffett to revolutionize your own portfolio. It's not just about picking the right stocks, it's about cultivating an unshakable mindset and an eagle eye for opportunity. Take 𝐶𝐿, a global titan in land transport, as a prime example. Its robust business model and reliable cash flows make it an appealing choice for those who commit to a long-term investment strategy. By holding on to 𝐶𝐿 shares, investors can enjoy the benefits of steady growth and consistent dividend returns. Number 4. Value over price. Buffett's investment wisdom hinges on understanding the difference between price and value. His advice? Look beyond mere stock prices and seek out undervalued stocks that offer real intrinsic worth. Consider DBS Group, Singapore's largest bank. During economic downturns, even top-tier stocks like DBS can be unfairly discounted due to market pessimism. Astute investors recognize these moments as golden opportunities to acquire shares at bargain prices, anticipating that the stock will rise in value as the market rebounds. Number 5. Strong management teams. Warren Buffett is renowned for his focus on a company's leadership. To him, having a top-notch management team is not just important, it's indispensable for long-term success. He seeks out leaders who are not only skilled and ethical, but also genuinely invested in their shareholders' interests. By focusing on exceptional management teams, Buffett ensures that he's not just betting on a company's current performance, but on its future potential. This foresight is what separates legendary investors from the crowd. Consider Capitaland Investment Limited, a prime example of this principle in action. Their adept management has not only steered the company through various market fluctuations, but also expanded its real estate footprint across the globe. Investing in companies with such proven, resilient leadership can significantly increase your chances of achieving enduring returns. Number 6. Mr. Market, your friend or foe? Warren Buffett offers a unique perspective on the stock market, personifying it as Mr. Market, a character with dramatic mood swings. At times, Mr. Market is exuberantly optimistic, pushing prices to unrealistic highs. At other moments, he's steeped in gloom, slashing prices on high-quality companies. Instead of seeing market fluctuations as mere noise, Buffett turns these swings into strategic opportunities. When Mr. Market is panicking, it's like finding hidden treasure at discounted prices. Conversely, during his euphoric phases, it's a chance to assess whether the hype is worth chasing. This approach is a masterclass in using market psychology to your advantage. The real challenge is to stay grounded. Take advantage of Mr. Market's low points by buying when he's overwhelmed with pessimism, and be cautious during his manic highs. It's about using his volatile nature to your benefit, rather than being swayed by his erratic behavior. Number 7. Beware of the noise. Stay focused. In the tumultuous world of finance, distractions are everywhere. From tantalizing stock tips to sensational market predictions and breaking news flashes, it's easy to become overwhelmed and lose sight of your investment goals. Imagine navigating through a stormy sea. While most are tossed around by the waves, Buffett's methodical approach is like having a seasoned captain guiding you through the fog. By silencing the incessant noise of short-term market fluctuations, Buffett empowers investors to maintain their course with unwavering confidence. Warren Buffett's wisdom cuts through the chaos. Ignore the clamor and zero in on your long-term strategy. Resist the urge to let fleeting market movements or media buzz steer your well-thought-out investment choices. Stay the course with your research and vision, and let the noise fade into the background. Number 8. Avoid high debt levels and appreciate dividends. Buffett's strategy includes a keen eye on debt levels. Companies burdened with excessive debt can falter, especially when economic headwinds hit. High debt can strain a company's financial stability, curtailing its growth and resilience. Instead, Buffett has a penchant for firms that offer consistent and rising dividends. These companies typically demonstrate robust cash flows and a solid commitment to rewarding their investors, providing a dependable income stream. Take, for example, Sheng Siang Group 𝐻𝐶𝐭, a premier supermarket chain in Singapore. Known for its steady dividend payouts, Sheng Siang maintains a strong balance sheet with minimal debt. This disciplined financial approach allows it to navigate economic fluctuations gracefully and invest in growth and innovation. Number 9. Live below your means. Warren Buffett, a paragon of financial prudence, remains a beacon of modesty despite his vast fortune. His secret? A steadfast commitment to living within his means and maintaining a rigorous savings habit. Think of savings as a powerhouse. Like any muscle, it grows stronger with consistent effort. The more you save, the more you can invest, and the quicker you'll accelerate toward your financial aspirations. It's not just about accumulating wealth, it's about nurturing a financial mindset that prioritizes long-term growth over short-term splurges. Warren Buffett's approach isn't just about saving and investing. It's a lifestyle choice that redefines how we view money. By embracing a frugal mindset, even billionaires like Buffett show us that financial success isn't about flaunting riches, but about mastering the art of disciplined saving and strategic investing. Number 10. Patience and discipline. Buffett's investment ethos hinges on two pivotal traits: patience and discipline. In the frenetic world of investing, it's easy to be swayed by market turbulence. Buffett advocates for a calm, measured approach, urging investors to stick to their strategies and avoid hasty decisions driven by fleeting market noise. Take the COVID-19 pandemic, for instance. While many were quick to offload their stocks in a frenzy, those who maintained their composure and held their investments in local banks and real estate trusts saw their portfolios rebound swiftly as the crisis abated. In the realm of investing, steadfastness often outperforms impulsiveness. If you found these insights as captivating as we did, don't forget to hit that like button and subscribe for more powerful strategies and timeless wisdom from the world of investing. Until next time, keep investing wisely and watching for more ways to enhance your financial journey.